Welcome to yet another exciting time on television where we have veritable conversations that shift our nation, push it to that place it ought to be. Today, we have somebody to do justice to the conversation. I call him Mr. Green because there's been a lot of green revolution going on at the bank, and the MD, of Sterling Bank here with us. Great to have you. I mean, for those that are just watching at home, I'm sure they want to know you. A little introduction about you. I know you, but a lot of people watching out there would like to know you even more. And this passion for everything green that Sterling Bank is championing today.
Thank you very much for having me. My name is Abubakar Suleiman. I'm currently the CEO of Sterling Bank. I'm part of a project that is trying to use our abundant resources to grow this country. So we're very focused on finding resources that are native to us and in abundance. And what is more native to Nigeria than the sun? So going green for us is not just about finding alternative energy. It's about finding alternative energy that is abundant, that therefore allow us to be competitive. And so for us, green is almost always solar and then other sources.
You've done the whole building. It's all going off grid now, which is one of the first of its kind. You've also won a Guinness Book of World Records, as regards that. You're also setting up new verticals in your business with Quora and green, places where people can charge their, cars and things like that. Can you tell us all about this transition?
And so as a financial institution, we sometimes try to replicate what has happened in advanced country, where your role is very limited, a very tiny vertical of financial services. What we found out is that for a country to develop, banks need to do much more than that. You can't just sit back and wait for the growth to happen. You need to trigger the growth. And so we started by focusing on certain sectors, and those sectors that form the heart sector, there's the healthcare, education, agriculture, renewable energy, and transport. We've been building capabilities in these sectors. We've been doing advocacy. So what you see in renewable energy today, or what you see in mobility, or even in healthcare and education, is the work of 8 years of intense focus, right? So for us, we found a space where we can be a successful financial institution, but we can also be a strong partner in development. It is so important that you bring both the government and development institution to the table if you are trying to trigger significant growth in a country like ours.
So Quora was born out of that. Many other green initiatives, and you started with your building and you're pushing it out. There's talking about initiatives CSR and doing. Trump recently had a big cut when it comes to USAID, and we've been having that conversation, and it's dawned on us as Africans that we can't continue this aid mentality. Then a lot of people are saying, can companies also pick up the bills? I know you have a foundation. What are you projected probably to do as regards that? And what's your thinking around what is happening in the world today with the uncertainty as regards Trump itself?
Despite the uncertainty arising from the changes going on in the US, I'm an eternal optimist. But my optimism is not an article of faith. It comes from a perspective, and that perspective is being able to step back and look at the opportunities. It is not right that certain fundamental part of our needs are being funded by aid. This country has so much potential that it need not rely on aid or even CSR. Those things are temporary intervention, and we should step in, but we must build for something much more sustainable. What do I see happening? I see a situation where, because of the fact that some of the funders have moved out, new people who have capacity will step in. But more importantly, I think it's a wake-up call to government to say that we shouldn't build our health sector to depend on international aid. We need to build a health sector that is localized. And this has been our journey in healthcare financing. The work we're doing with Ilera Eco, where we are trying to take last-mile healthcare to people in Lagos State, and we have similar work in a couple of other states, is domesticating healthcare in a way that is affordable to our people, bringing in health insurance, but more importantly, bringing in technology, using telemedicine, so that the unit cost of healthcare becomes something that is affordable to our people, right? So this is a wake-up call. The same way COVID was a wake-up call. It forced us to relook or have a different look at healthcare and education. We never considered using technology to advance education to the last mile until we were forced by COVID. Right. So again, I'm an optimist, but my optimism comes from the perspective that I've taken, which is I see things differently precisely because countries make progress in times like this. When things are stable, very limited progress is to be expected. But when there is a little bit of, when there are challenges, we will find new ways to express ourselves.
So you're going to call this our finest hour? as a country. And I used to go to call it our finest hour when Trump's tariff is everywhere. Colombia, Canada, we're going to have probably a stronger dollar this year. And because of that, you're looking at trade and business dynamics in the world. Everybody is jittery because of this. Can you still call it our finest hour?
I think that Trump's tariff is an opportunity for Africa. I think that a lot of the countries that are going to face direct tariff from the United States, are countries that we could actually take some of the work that they do. For instance, there are countries in North Africa today, like Morocco, that are beginning to become the EV destination because they are able to assemble EV and then export to Europe. There's no reason why Nigeria can't aspire to that. There is a reason. The reason why the tariff is so focused on the wealthy countries is that the US deemed them as competitors in some form. We're not that. We can actually offer products and services to the United States in ways that they will consider a fair trade. So I don't see it as all gloom and doom. I think it's an opportunity.
Especially at the time where we have debts that are some of them denominated in the USD, and this gets stronger impacts on our debts and our downline.
But at the same time, we have an opportunity to export in the USD. So when you have a situation where inflation is likely to rise in the Western countries especially, but most likely across most developed countries, people like ourselves are going to be much more competitive in exporting services and goods. All we need to do is to focus on exporting that. Our debt is inconsequential. How much is our foreign debt? Less than $50 billion in debt falling due over the next 6 years. That's an amount of money that we can easily pay by either advancing our current resource export, or we reinvest in being able to effectively provide services globally that can earn. So I don't see our debt for a country our size as something that is insurmountable. I just see the fact that we have not yet advanced our own earning capacity, and this is the time to do so.
But a lot of people are fighting with the government's approach to be able to raise revenue, because the problem is we have a revenue problem. You say our debt is not surmountable, but people ask you, where's the revenue? We don't have it. We barely had a 49 trillion budget. That's about $30 billion when you look at it. But we are taking about 16 trillion of that for debt service and all of that. Then the government is saying a tax bill to be able to reject things. A couple of businesses are complaining. What's your grouse about? You've got a grouse about the tax bill?
I think a country has to make a choice between inflation and taxation. If you choose not to be taxed, you will be taxing directly through inflation. And that's just a fact of life. The only time you can escape that is if you are a resource-rich country and you just simply export crude and spend it as government budget. We're no longer that. Right? So should we continue to witness 30-40% inflation, or are we better served by paying a reasonable amount of taxation so that the government can function? I vote for taxation any day ahead of inflation, because inflation is a very painful tax for the poor. The people that pay the highest taxes when you inflate a currency are the poorest people. So that's number one. We've got to pay the taxes. Secondly, we, as a country, we actually have a revenue. I mean, that's what the gross national product is, right? We earn. The GDP is our revenue. What has happened is not enough of that revenue is being articulated through government, right? Government is not able to extract enough of that revenue to then deliver its own objective. Part of it is because government hasn't been as efficient, and therefore the trust level is low. Part of it is that we have other agencies that are not directly integrated into government that are extracting revenue. If we consolidate revenue into a single source and we have transparency around it, the revenue will be significant and will be enough to pay for our development agenda.
In consolidated revenue, a lot of people are saying tax the banks more.
Yes.
Are you open for more tax?
I think...
Despite what you're going through, despite the challenges, despite the fact that they're saying the government is not doing enough for you guys, they say you guys are just making huge profit.
I think you should tax the profits more. It doesn't matter where the profit is, tax the profit more. If we make profit, take more of it.
But recently, when they said there was this hullabaloo about taxing the banks were at loggerheads. Nobody wanted
I think there is a difference between a levy. What we were quarreling about was the windfall levy. That wasn't a tax. That was saying, oh, you've got quite a bit of money, they will take some of it. FX is a two-way thing, right? There are a lot of losses that would also be recognized as a result of the FX movement. And some of it will also be in the books of the bank. Some of the companies that have suffered losses, eventually when the loans go bad, the bank will pay. So that's not a thing for debate. I think taxation is the alternative to inflation. I think if we do not allow the government to, earn enough money through taxation, we'll end up having deficits that would then feed into higher level of inflation and everybody pays. So tax the bank more, maybe, but definitely tax the profits more. I think we should tax our profit pool so that we can then take the money back and hopefully create growth. Our only quarrel with government is that they've got to be a lot more transparency around how they spend the money. People need to feel confident that the money that goes out there then enables growth. And the second one is that we would like to have fewer frictions, right? The more taxes we pay, the more we would like to be left alone to grow, because a lot of the frictions that we face ends up costing the government in taxes, because then we're not competitive. And before you know it, somebody in Cote d'Ivoire is producing a product cheaper than we are because their government is more supportive, and then we lose employment. So the government needs to understand that when we ask for a better operating environment, it's also in the interest of the government.
February, this month, will make it exactly 1 year since the CBN started to tighten. Inflation has not abated. By middle of last year, they said it was going to be around 26%. Today, it's over 34%. We are still paying the tax on the poor, like you said, which is inflation. You have customers. Like when they come to this bank, you'll be telling them the interest rate probably will notch up to 30% because of the CBN rates. How's that ordeal been?
So the challenge or the cost of not doing the right thing at the right time is that you have a prolonged period of pain. What we're paying for is not the price of something that happened last year or the year before. It's for a prolonged period of deficit financing, where the deficit did not finance growth, right? So it takes a lot more to pull that back. Is it painful? Absolutely. Is it necessary? I believe so. If there was an easier alternative where we could actually try to stabilize the currency without having to go through this pain, I would vote for it. But what people forget is that we have successfully stabilized the currency, and that is a significant part of what feeds into our inflation. What we now need to do next is to reduce government deficit, and that is why we need to have the tax reform and improve the amount of money that comes in through taxation. Once that happens, and you have stabilized the currency and you've reduced or moderated the deficit, then you start to see a much more stable currency. The beauty about stabilizing your currency is that people start to hold more and hold investment in your currency, and you no longer have the capital flight that we're facing. We need to remember Nigerians, even when they are domestic investors, are also international investors. If you create a situation where your local currency continues to devalue, what happens is all their savings will end up in international currency and international market. Painful as it is, I do not have a better alternative. And if someone had put on the table an alternative that meant that we could reduce inflation without the pain of higher interest rate, I'm certain that the government would have taken it.
So where do we find the common ground? Productivity stifled, manufacturing stifled. We want growth. We're growing a little over population growth, about 3.4%. The benchmark for inflation that we said we're going to achieve last year, we failed on that. Going into this new year, do you see any place in the crystal ball where it says inflation can at least nudge downwards to about 30% to even start with a ray of hope?
I do believe that inflation would nudge downward. And I started earlier by saying that the component of inflation that we've been able to tame is the foreign exchange rate. That plays a significant part of inflation. The second component of inflation I think there's a focus on now is food inflation, right? Whatever we can do around food inflation is so critical, is so important. The third component, and it's one that the government has paid some attention to, is transport inflation. Primarily by introducing the CNG transport energy as part of the energy option, or the work we're trying to do with EV as part of the energy option, or the fact that because we've now removed subsidy on petrol, we've now stabilized that cost. Prior to now, it was a major increase in energy and transport costs because of the removal of subsidy. So think about it this way. We've stabilized exchange rate. We've stabilized the cost of fuel. We're beginning to see improvement in food production, largely because some of the funding that we lost when we did the currency exchange has now been replaced, and have new funding going into agriculture. So my optimism, like I said, comes from looking at the data. The data tells me that 2025 is going to be vastly superior to 2024 in terms of the macro, in terms of price stability. and potentially in terms of output across board.
But we still have a problem with money in circulation, which is another big inflation driver. We've not been able to nip that in the bud. Despite all the attempts to take money out and take this hot hair of money out, it's been problematic over the years. In fact, there are still court cases in the Supreme Court as regards, the Naira redesign and the extension of the continuous spend of the old Naira note and the new Naira note and the entire money play in circulation.
I think that in terms of money in circulation, what I see as a strong opportunity for us is that the reserves of the country has been rebuilt. A lot of the earnings over the last 18 months has been used in rebuilding the reserve and rebuilding confidence. Now that the central bank has a very robust reserve, what would happen is additional earnings over the years would be used effectively to reduce the Naira in circulation. So they will no longer hesitate to mop up excess Naira from the system using their FX earnings, So that's one. The other point is there's been a reasonable increase in crude production. This is a key part of how we manage money in circulation. A lot of that money came into circulation where crude production was so low that to be able to fund FAC, of course, obviously the ways and means came on board. Now that there's no more ways and means, as you can see, the current central bank is very focused on using orthodox methodology in managing its macro indices. We don't see that happening anymore. So the excess money in circulation, we expect that to start to reduce gradually as our earnings from oil and gas goes up, and non-oil export has also been strong. Again, if we really stop, following the crowd and think about the data, Nigeria is in a pretty decent place.
But we've just securitized ways and means. We still have that problem there niggling in the corner. And also, when you look at it, a lot of people are still talking about the fact that, yes, there's economic pain. The data looks good. It's turning the corner, but we are not seeing the real effects on the lives of people, which is another challenge. And I'm happy you talked about, ways and means. You talked about the fact that we're doing well in crude oil production, but we are still mounting up a lot of debts. We are still borrowing a lot of debts. A couple of weeks ago, the stats came out that we're now doing over 143 trillion, which is a sizable part of our GDP in debts. Yeah. And also the orthodox means of managing the economy, you're talking about the CBN, which is attracting a lot of foreign portfolio investments. But there's also a downside to that, because when you look at it, it's a lot of hot money coming in. When that hot money comes in, the question is, we need FDIs, which is foreign direct investment, rather than the hot money. Right. And those portfolios, we also need to pay on the interest of those portfolios, which the numbers will cost us over 1 trillion, like they said last year. How do we balance all of this out?
So do you know what foreign direct investors are looking for? Above all else, they want some level of predictability. They want stability. They want a market where the price is determined by market factors rather than an individual. And that's what we're giving them, right? We're giving them price discovery. We're making it possible for them to see how their money can come in and go out. So if you ask me, the most important reforms we've done are the reforms in the marketplace. Even when it comes to energy reform, we saw a significant demand for alternative and renewable energy when the price of the energy prices was adjusted, right? So it's important to first understand, what do investors want? The second comment for me regarding whether or not this pain is going to translate is that we need to understand that the fact that we're no longer growing the ways and means, that we're no longer using it, is massive progress. In other words, we've stopped digging, right? It's only when you stop digging, then you can start filling the hole back. I don't have a problem with debt. Every single country that is doing well today has a certain level of debt that is used to finance its progress. There were two problems we have with debt. One was that if you're not collecting enough revenue to service the debt, that's a problem. And the second problem was when you're not using the debt for economic reasons that generate additional growth, then that's a problem. What we have seen is that the percentage of revenue we collect now that we use for debt service has reduced. There was a time we're using 80% of our revenue for debt service, right? So again, we have to understand that there is no miracle cure. There is no switch you can turn on and suddenly everything is okay. we need to watch the direction of everything that is important. What are the directions? What is the direction of borrowing relative to the revenue of the government? What is even the direction of borrowing relative to the GDP? My view is that by the time we have a more accurate measure of our GDP, we realize that our debt to GDP is not nearly anything to panic about, right? So you were right in saying that, is the man on the street feeling the full impact of the reform here? The answer is no. And it's exactly because the nature of reform is that you've got to do the stuff that will make people do the other things that will then lead to last mile impact. The government has spent the last 18 months doing the stuff that investors have been asking for. What we expect to see is over the next 6 to 12 months, investors start to do the things that will generate employment, generate output, make us competitive. So again, the data suggests very strongly that 2025 is a year that we can all look forward to.
So let's look into your crystal balls and ask, you think a 30% inflation rate or a 25% inflation rate in 2025 feasible?
I think that we will see a 25% inflation rate as we approach the end of the year. Yes, and the different components of it that I've analyzed, I think very easily 25 is more likely than 30.
Okay, because we said that last year. Also, when you look at it, on the revenue side, we're doing good. But on the debt side, you still see increased debts?
The only concern I have with debt right now is that the cost of debt is high. So domestic debt coming into the market above 20%. I can understand that for short-term borrowing, but I would not like to see us have long-term borrowing at that level. And that means that there should be indication that interest rates will begin to go down. That way we can start to price the longer-term debt cheaper than the short-term debt. That could then become.
Do you think by the time the monetary policy committee will meet, maybe a couple of quarters from now, we might have interest rates deceleration?
I would just love to see stability for a while. The thing about economic parameters is that you take a decision and it takes a while for the full impact to kick in. So I wouldn't want them to reverse the direction and suddenly have a reason to, again, change direction. If they don't increase it and they just hold it for 1 or 2 more quarters, I'm actually happy with that. That way, by the time we start to see a downward trend, it will be one that we know for certain is sustainable. It will be because it's been backed up by the stability that they're looking for, and so we can then pursue growth.
So probably at what quarter do you want the hold to start?
If I see it in the 3rd or 4th quarter, I'll be happy with it.
Also, for the real sector that are screaming and some of those people that are your customers at Sterling Bank, what kind of energy would you give to them at a time like this when they come, they want to do that deal, but it's way beyond their downlines because they're also facing power problems and other problems outside?
When it comes to the impact of interest rate on the decisions by manufacturers, I think sometimes we overstate it. And the reason is because if you look at debt as a percentage of the total capital structure of most manufacturing companies, it's actually quite insignificant. And then by the time you look at the cost of debt as a percentage of their total cost, is rarely ever up to 10%. There are very few companies today that you can pick their financials and say that the cost of debt or their financing cost is more than 10 to 15% of total. So it is the other 80-85% that actually determines their decision rather than the 10% that comes from financing cost. And that is just simply because we're not a highly leveraged economy yet, right? So I don't think that the fundamental reason why companies choose to produce or not produce is financing cost, except where you are undercapitalized, in which case you are a riskier company because you don't have sufficient capital to even take the leverage in the first place.
So looking at your crystal ball, do you think that we might turn the corner on food production and energy, some level of energy sustainability, actually producing power, loading more on the grid in your crystal ball this 2025?
When it comes to power, I think that the investment required on the grid for us to scale is so significant that some of our best bet is to decentralize the grid in some level, or at least in industrial centers, to be able to produce in industrial centers. So yes, I see energy going up. I don't know that they will necessarily come in through the grid. The other concern about food production is, to what extent are we going to keep advancing the improvement we've made in security? Because if without doing anything else, if we advance security in this country, food production will return to what it used to be. A lot of people will go back to the farm. And I'm positive that security situation will improve in 2025.
Do you also think that the general well-being of the Nigerian people, where they will say, oh, actually, okay, this suffering was worth our while. Will they see it in their costs? Will they see it in less tariffs? Will they see it in, because all they just see is they go to the pump price pain, they go to this pain, they go to that pain, it's up, hospital cost, every cost is increasing. Will they see at least some trending downwards as regards costs? Is there anything like that in the horizon for you?
So the thing about inflation is that there are always two sides to inflation. Every time the price goes up, somebody's paying, somebody's earning. So we often look at it on one side, which is the urban poor. They're the one that are most affected by inflation. But every time there's food inflation, someone in the rural is also earning a little bit more. So I don't know that it's everyone that is equally affected by inflation in the same way. I worry about the urban poor, especially those that are on fixed wages, because it's very hard for wages to increase as fast as the cost of food. But those that are on variable wages, the informal sector, they're incredibly good at adjusting their prices to reflect their cost of living. So in a sense, the reason why Nigeria is so, in a way, almost anti-fragile, is that different people are impacted by different things differently. And so when you expect same reaction from everyone, it doesn't always work out that way, right? So I'm confident about improvement in the quality of lives of the average person, but I'm not saying that it's going to affect everyone in the same way. And I suspect that the last people to positively benefit from whatever changes we see might be the urban poor. And that is why when we are looking for intervention, we need to pay a lot of attention. And in the urban poor, I think healthcare and education is one way to support them. If the government can focus on giving them access to healthcare and education, then we will hopefully be able to moderate the negative impact of reforms on their lives.
You think Nigeria will self-organize? Nigerians will self-organize more to be able to bridge the gap where, our government cannot feel like, Talib Nassim talks about in the book Anti-Fragility. Do you think they'll do that more in 2025?
So there are a lot of theories around why Nigerians somehow seem to be able to survive everything, right? My view is that this economy is so informal that to a large extent, what we capture and what we measure doesn't truly reflect the state of the economy, right? That informal nature has meant, for instance, that a lot of people that would have otherwise suffered if they were in the formal sector were able to adjust their lives. It has also meant that we've underestimated the true size of our economy, right? So I don't think it's easy to take any framework from anywhere else and use it to articulate Nigeria's challenges and their opportunities. What I do know is that this country is so resilient, haven't come through so many difficulties, that when we have a little opening, when things work well for a short period of time, there will be a massive amount of growth. The people are tough. The people are committed. The people are hungry. The people are independent. They have learned not to depend on government for things. So give them a little opportunity and they will deliver growth.
Mm. Is that a good thing or a bad thing?
It is a thing. It is where we are. It is what it is. But my view is that whatever I find myself holding, I turn it into my own weapon and I go to battle with it.
Thank you so much for your time. It is what it is. Real quickly, can you talk about the Guinness Book of World Records and Quora, which we have talked about before?
So one of the assets that we've tried to build is in the renewable energy space and in the mobility space. In renewable energy, this building is the first building, a high-rise building in Africa that has successfully implemented the BIPV technology to deliver solar to the building. In mobility, we started by supporting a company that has built infrastructure for last mile mobility, essentially electric tricycle. The first work we did was with a cooperative in Kano, a women cooperative that needed to figure out how to transport themselves and the children because a lot of them had limited access to mobility. We were able to design and create and assemble an EV mobility in Kano that is now one of the source of transport there. And what makes this special is that the battery is a swappable battery. And so you could easily just walk into a swap station and within 5 minutes you have full energy that can last over 100 kilometers. And we thought to ourselves, this work we've done with Kore, how do we make sure Nigerians know about it? How do we publicize it? And so Kore was entered into the Guinness World Book of Record to compete for the longest ride with an EV tricycle, and it broke the record. So Nigeria now holds the record for the longest drive with a tricycle, an EV tricycle, and it was done at one of our precious national asset at the National Theatre. So the background of the National Theatre and Nigerians trying to innovate around technology and to deploy to solve real problem on the street, I think it's something that I will remember for the rest of the year.
That's a good one. Thank you so much.